Hello everyone, I'm Sunil of Vision Inc. Today we'll be presenting the financial results for the first quarter of the fiscal year ending December 2025. First, let me start with the consolidated financial highlights for Q1 of the fiscal year ending December 2025. We have announced business strategy aiming to increase operating profit to 10 billion yen within 4 years. For this year and next, we had previously explained that we would make upfront investments, so I would like to explain the breakdown of these investments first. First, as upfront investments, we recorded 165 million yen in Q1. The breakdown includes 50 million yen for New York, 65 million yen for World eSIM, totaling 115 million yen within the global Wi-Fi business, which is an investment not made last year but implemented this year. Additionally, 50 million yen was invested in the Information and Communications Service segment for accounting BPO. This was to establish facilities and hire personnel, representing proactive investment. As a result, operating profit was 1.51 billion yen, and the full half-year forecast for operating profit is 2.797 billion yen. The progress rate is 53.7%, exceeding the halfway mark and progressing smoothly. Next, here are the highlights for the first quarter. Sales were 9.237 billion yen, up 7.6% year over year. Operating profit, as explained earlier regarding investment, decreased by 1.5%, from 1.524 billion yen to 1.501 billion yen. The global Wi-Fi business grew 5% from last year, with sales reaching 4.881 billion yen and profit of 1.413 billion yen, which is a 1.3% decrease after accounting for investments. The Information and Communications Service business grew 9%, from 3.681 billion yen to 4.013 billion yen. Segment profit decreased slightly, from 534 million yen to 517 million yen due to investment costs. Meanwhile, the glamping and tourism business grew 39.7%, from 243 million yen to 340 million yen, and segment profit increased from 28 million yen to 29 million yen. Continuing with the breakdown of highlights. As mentioned earlier, business strategy targets achieving 10 billion yen in operating profit by 2028 as a new starting line. We will actively invest in World eSIM and also increase locations and recruit talent for the accounting BPO aimed at data-driven sales. These investments are reflected in the figures I just explained. In the global Wi-Fi business, corporate clients remain solid. Customer unit prices also continue to maintain high levels. Inbound services such as Ninja Wi-Fi, physical SIM card from vending machines, and eSIMs are all performing well. As stated, we are making aggressive investments. In the Information and Communications Service business, mid-career hiring is progressing well. The mobile communication and space management businesses are also doing well. We are also focusing on building a stable revenue base by expanding our in-house developed recurring revenue services, which is progressing steadily. However, the accounting BPO investment mentioned earlier has been a front-loaded cost of 50 million yen, which is suppressing profits. The glamping and tourism business is performing well at both Yamanakako and Koshika Onsen, with growing numbers of foreign visitors. Additionally, inbound travel arrangement services are growing steadily, and all our business segments are showing growth. Next, customer attributes. Regarding outbound travel, comparing 2024 and 2025 Q1, the corporate versus individual ratio in 2024 Q1 was 51.8% corporate and 48.2% individual. Since the beginning of this year, corporate customers have grown to 57%, indicating corporate growth is pushing the overall balance rather than individuals declining. On a sales amount basis, corporate share grew from 63.5% last year to 70.6% this year. Repeat customers accounted for 56.4% last year and have increased to 62.9% this year. In terms of sales amount, repeat business grew from 59.2% to 64.9%. Next is the usage ratio of unlimited plans. For individuals, unlimited usage ratio rose to 65%, and for corporations, it increased to 78%. This ratio has been steadily rising each year. Similar to when we first introduced 4G after 3G, the market is gradually shifting. The usage ratio of unlimited 5G plans is also gradually increasing. However, although many of you are probably using 4G and 5G, I think there are quite a few people who haven't really felt a big difference, like when we switched from 3G to 4G all at once. So the market is gradually changing, and rather than a sudden shift like from 3G to 4G, the transition is happening more slowly and steadily. Coming next is the sales trend for the Global Wi-Fi Business's World eSIM, which is part of our investment. Sales increased significantly by 504% year over year. Progress toward this fiscal year's forecast is 28.5%. This exceeds the 25% benchmark. World eSIM now accounts for 5% of Global Wi-Fi Business's quarterly sales, with transaction count and repeat rate progressing well. The graph shows both quarterly and cumulative figures, with the repeat rate rising from 0% to 31.7%. An important point is that individual users tend to use eSIM much more than corporate users. Unlike corporations, individuals usually travel only 2 or 3 times a year, so the time between repeat usage is longer. The current 31.7% repeat rate suggests potentially larger repeat business in the future. However, we want to stay focused in this area. The sales volume forecast is 376,000 transactions and 861 million yen in sales for this year, and progress toward this target is on track. Next, we will talk about the consolidated income statement. Sales figures were already explained. The profit attributable to owners of parent increased compared to last year. Apart from investments, the first quarter is progressing steadily. Next, I'd like to report on the performance change of the Global Wi-Fi business. As I explained earlier, when looking at the past 5 years, we hope you can view the current situation as progressing in this manner. The information and communications service business is also growing steadily. Regarding company-wide recurring revenue, the pace in Q1 is 610 million yen, significantly exceeding last year's pace of 2.18 billion yen. Now let's look at the factors behind the decline in operating profit. This is the breakdown of our upfront investments. First, the cost of goods sold increased by 433 million yen, and personnel expenses increased by 233 million yen. And then about 58 million yen was spent on advertising. That is the breakdown. Internally, we have long pursued cost reduction through DX. We actively implement AI and RPA to automate systems. Currently, around 730 robots are deployed, significantly reducing working hours, as shown here. As a result, employees can focus on core business while AI and RPA handle simpler tasks. External parties often remark that although Vision sales and profits grow, employee numbers don't increase much, and SG&A expense growth is lower than competitors. As I explained briefly, this is largely due to our early adoption of robotic automation. Next, regarding the corporate use of Global Wi-Fi Business, cumulative transactions set a new record in Q1, continuing from last year, and Global Wi-Fi for Biz is growing steadily. Next, some highlights. We exhibited at the Osaka Kansai Expo. Demand for Wi-Fi and battery rental services was high, with many customers using our products. Continuing with highlights. Vision Glamping Resort and Spa Yamanaka won the Rakuten Travel Award 2024. We were the only company in the glamping category to be selected. Next, we are running an internal video streaming service called vStudio. Our President Ota and Director Nakamoto have been actively creating videos, including those for internal communication. And these efforts were recognized with an award from the Japan Business Federation. I will talk about the shareholder returns. The dividend policy remains unchanged as previously stated, with Q1 performance trends progressing well. We plan to maintain this through the interim dividend. Thank you very much for watching this long financial results briefing today. We are in an active investment phase, aiming to build a strong foundation toward 10 billion yen in operating profit over the next 2 years. While investing proactively, we remain committed to thoroughly growing areas that can be expanded. Our employees will continue working to achieve these goals ahead of schedule. We appreciate continued support from our shareholders. Thank you very much for watching the video today.